Well, hello everybody and welcome back to Wayne Talks Real Estate. Dejong Hao, I'm Wayne. This week, the Reserve Bank of New Zealand has reduced the official cash rate, the OCR, and they've dropped that by 50 basis points. Now, that really is the beginning of the easing of the monetary cycle. So we're going to have a look at that and the key questions that it raises. Will lower interest rates boost house prices? Vendors are waiting to see that. They're hoping that the house price goes up. Will mortgage rates come down significantly? Borrowers, buyers are looking to see how do the banks treat it. Will they follow on with that? And we'll actually add into the mix the government's new investment immigration policy. So that's something of interest to us now. How will that influence the market? So we'll look across these broader economic and market or housing market impacts without diving too deep into the numbers. So let's tackle the question of how will the OCR cut affect the housing market? So the lower interest rates, they directly, obviously, reduce your borrowing costs, and that's going to stimulate the home buyers and also the investors. However, you won't see the prices on homes come up automatically just because that OCR is lower. There are other factors in the market to consider. Now, if we look at it, we have improved market confidence over the past 2 years. Those high interest rates and the tough lending conditions have kept many buyers on the sidelines. That's been the frustration for owners when they have been selling. Now, the OCR trending down now, buyer confidence will start to return, and that will encourage people to re-enter the market and start the stimulus there. Now, if investors are looking at it, what they're now looking at is lower costs, so that improves their yield. So we will get investors coming back in. Obviously, the second point as I go through is the increased buying power. So now you can borrow more and pay the same amount on your monthly payment. So the affordability has come in. Now, will that bring in first home buyers? Normally will. So first home buyers are now starting to come in. Does it mean prices will rise immediately? No. Other factors, wages, job security, and the economic stability, those factors still dampen the market as you come through or control the market as opposed to the reduced interest rate, the OCR, stimulating the market. Higher transaction volumes, but modest price growth, and that's fairly well what we're going to see. We should see an increase in the transaction activity. Maybe the prices come up, but they come up slowly. Certainly not going to be a spike. We're not expecting that. We won't see that. So a phase of steady but moderate recovery, which is great for us. We don't want to see a surge as it comes through. All right, now we look at the OCR's, or the cut in the OCR, its impact on the economy and the housing market in general. Economic growth and housing demand, if we look at that, certainly the cut does stimulate economic activity. Real estate is a major part of the New Zealand economy, so if that can get moving again and pick up, then there's a flow-on effect into the rest of the economy and the rest of the markets. You'll see businesses expand, and if employment grows, then household income may start to rise. Security comes back into that, and then there'll be more borrowing, so the household demand or the housing demand starts to pick up. But however, if the economic conditions remain weak, even that lower interest rate won't be enough to reignite the housing market, which is pretty steady right now, certainly not hot. Now, the impact of the foreign investment. Now, the New Zealand government has updated its investment immigration policy. We've looked at that already. We're talking to experts trying to get a handle on how they believe that will play out. That comes out 1 April, so we'll be interested to see how that rolls. That'll put additional capital into the property market. You would imagine that really has an impact to Auckland, maybe Queenstown also, maybe not the other regions as you go. But it'll it'll be interesting to see the detail of that, how it rolls. Long-term market trends, 2025 housing market, unlikely to experience a surge, even if we're now in the easing cycle. As far as cost of money goes, maybe more so for 2025, steady growth as it climbs out rather than a sharp fluctuation. And that's good for the market. As long as we're facing up again, then we're all happy. All right, so in conclusion, it simply is a market that's in transition. Looking ahead, the market cycle, new phase. We're entering into a new phase now. Short term, you would say there's going to be an increase in confidence. That will return. That will start coming back in. Price growth, likely to remain quite gradual as it climbs out. Long term, lower borrowing costs, so that's very good. Economic recovery, we're heading in the right direction, hopefully, for that. Foreign investment coming in, so that's going to give us a more stable housing market, and that's a big thumbs up. We're certainly looking for that. 2025, year of transition. That means there's going to be opportunities there for buyers and for investors. You'll need to watch the cycles, the trends, any changes. To do that, you simply like, subscribe, and share, and stay connected with us. We appreciate your comments. We love you watching us and being part of our audience, and we're here to serve you. Thank you very much. Ciao.